Equity Bank just launched their 2022 sustainability report. I'm going to be sitting down with the MD and CEO, James Mwangi, to understand about their sustainability agenda and, of course, how the bank is faring. Let's take a look at his profile. Dr. James Mwangi is the Managing Director and Chief Executive Officer, Equity Group Holdings PLC. James holds 6 honorary doctorate degrees in recognition of his positive impact on the Kenyan society. He holds a Bachelor of Commerce degree and is a certified public accountant. He has been honored thrice with National Presidential Awards, the First Class Chief of the Order of the Burning Spear, the Moran of the Burning Spear, and Head of State Commendation. On the global front, he has won several awards including G8 Global Vision Award 2007. He was named among the top 50 emerging market business leaders and the 20 most influential people in Africa in 2011. The World Entrepreneur of the Year by Ernst & Young in 2012 and Forbes Africa Person of the Year in 2012, and was recently named in the Bloomberg 50 list of people who defined 2019 globally. He's an honoree of the 2020 Oslo Business for Peace Award, also described as a Nobel Prize for Business. On the regional front, James was also recognized as the Africa Investor Awards CEO of the Year 2009 and 2015. Innovation Leader of the Year in 2012, Africa Business Leader of the Year in 2013, and African Banker of the Year in 2010, 2011, and 2017 at the African Banker Awards. He was also named the Banker of the Year during the Banker Africa East Africa Awards in 2017 and 2018 and named African CEO of the Year by the African Business Leadership 2020 Awards. Locally, he has received the Think Business CEO of the Year award for the last 5 years. James has served on several boards and advisory roles and currently serves on several international bodies. Dr. James Mwangi, welcome to the show.
Thank you very much for having me.
Absolutely. Yeah. And of course, I must start with a congratulations message to you for your successful launch of this sustainability report. My curious question is this: what informs this as Equity Bank? Why are you so keen on ensuring that your sustainability agenda is at the core of your function?
Thank you very much. It is true, sustainability. It's the center of Equity's strategy.
Yeah.
And it's because we know that current generation are holding the world in trust for future generation.
Yeah.
So it's important for us to then focus on sustainability so that we get what we want out of the world, meet our needs without jeopardizing the future generation from meeting their needs.
Absolutely.
That's how we see sustainability. So we see as the basis of creating intergenerational transitions and having a future. Truly, sustainability guarantees the future.
Absolutely, absolutely. And I'm keen to ask, I know I'm going to have a copy for myself to go and read through, and I know there are many things you could highlight that are there, but maybe one important one or two that is key for you in the sustainability report.
I think there are 3 big ones.
Yes.
The first one is on the governance structures.
Okay.
The framework that enables Equity to do things the right way. It's not just what, it's how you do it. And that has really helped us to comply with all regulations, to comply with the procedures. The second aspect of it is the social impact. Because while we talk about climate and all that, if you leave people behind, then they will not have the motivation or inspiration to conserve the environment. So we bring people at the center of it, and we focus on education, the Wings to Fly, the Equity Leadership Program. We focus on health, the Equity Afya. We focus on farmers and micro and small enterprises, the financial literacy, the credit access to them. And then the third bucket is about environment. And that is where we are very big in looking at resetting our energy uses. Because the climate change has been driven by pollution and emissions. So we're really then focusing, how do we change the energy uses and convert most households to clean, sustainable energy, convert schools' energy, and essentially, lastly, get households to transit from fossil woods to clean energy.
In fact, what you've said is very true, that we cannot prepare really the future for the people. We can prepare the young people and even the people for the future. Let me start with, of course, your recent results. Speaking about 2022, which you have released your report as well, you have also recorded impressive results for that year. And of course, even Q1, I heard you speak boldly about some of the initiatives and things that you have done. But first, talking about the results, year on, keeping the growth curve up and going, what are some of the key drivers? I'm keen to ask that so that at least even your competitors may borrow a thing or two.
I think the biggest driver of Equity's performance is our people-centeredness.
Yeah.
Equity is focused on people. It is focused on consumer protection. It's focused on inclusion, ensuring nobody is left behind.
Yeah.
It's focused on helping clients to mitigate and adapt to new environments. And that really explains the performance of Equity. One, from the growth in number of customers, because that's the biggest measure of response from the people. The quality of their own book, because you help them to mitigate non-performing loans and you capacitate them to do better business. And lastly is because we provide solutions that the community needs. It's market-driven solutions.
Okay. You have been very bold and really bullish in terms of looking through the African market. And I have seen you at the AFCTA forums really driving agendas towards the Congo. And in fact, I have a quote for you that I quoted, and you said this, that in 2027, you see even the DRC market surpassing the Kenyan market. I don't know, what are the key learnings and what are you finding out as you have this regional perspective?
Broadly, the size of a business is determined by the size of the market.
Yeah.
So by embracing the East African community, by embracing the African continental free trade area, we're opening larger markets for our customers. And Equity is an aggregator of the customers' businesses. So the larger our customers are, the larger Equity becomes. That is why we are a major champion of African Recovery and Resilient Plan that sees the entire African continent give opportunity to its people in a very resilient, sustainable way. Now, DRC comes to force because it is the most endowed country on earth in terms of natural resources. But its human capital is not as developed as Kenya. So we can partner with the DRC with their resources and our human capital and work together to really exploit those natural resources to solve some of the world's biggest problems, like food security. DRC has 82 million acres of arable land. That is 1.5 times the size of Kenya.
Absolutely.
Just arable land. And Kenyans are very good, hard-working farmers. So we could really partner with DRC. They have the land, we have the know-how. Then the second one is minerals. They have 40 to 60% of the strategic green minerals. So we can work together with our skills and our capital, with their minerals, to solve the problem of climate change, like developing car batteries in DRC and moving to electrical appliances using copper. So essentially there is quite a lot we can do and give Kenyans a huge opportunity for growth.
Okay. Let's talk a little bit about some of the developments locally that have been seen, especially through the central bank. And one of it has been the risk-based pricing that recently got introduced. And you're one of the pioneers banks that received this particular model. What does this mean for your customer and how is this panning out?
In 2016, interest capping was adopted in Kenya at the sovereign risk rate at 13%. The government at the moment is borrowing up to 17%. Yet interest rates had been capped at 13%. So everybody was giving the money to government because it's risk-free and the rest. What it did is that it crowded out the private sector, it crowded out the individual. So we really lobbied to have risk-based credit so that everybody can get access to finance. When you really price everybody at their risk, nobody is excluded. But when you set interest rate, then you exclude anybody whose risk is higher than that interest rate. And that's what has happened in Kenya. And we defranchised. If you look at credit to GDP, before interest capping was at 42%, it's now down to 26. We could not give Kenyans credit. We are now back, and we have seen it starting ticking up. We are now at 28 in just the last 7 months.
Wow. And let me veer off to innovations and, of course, matters to do with digitization. And you're on record saying that you have seen a growth, 23.3% last you spoke about in your announcement in May. Is this a behavioral change you're observing? Because constantly people look like they're moving towards that. What are your learnings?
What we have learned is that Kenyans are very adaptive. We must acknowledge that COVID acted as a tailwind to adoption of digital solutions. But equity was ahead of the curve. We had implemented the systems. So as a result, we now have 98% of all our customer transactions being on digital platforms. What we have realized is customers are cherishing and appreciating the convenience and the ease. They can now do banking 24 hours and they can do it from wherever they are. So essentially, we have removed the distance and we have removed the time and delivered unparalleled convenience and ease to the customer.
Yeah, you're right. And of course, with such innovations that we constantly see, comes with risks as well. And I've seen you go quite bullish on customer education so that at least they're careful with that. What does this mean for you on a risk basis? What are you seeing?
What we have really focused on is to try and protect the customer from the bank. And we have maybe the most reputed firm supporting us, particularly in protecting our customers from cybercrime. However, the risk still remains with the client because they have access to their accounts. And the biggest challenge in Kenya has been social engineering. And that's why we always tell customers, we can call you on only one number. Because essentially what fraudsters are doing is to call the customers and capture their mind and socially engineer them to defraud them. So essentially, that's why we have a responsibility to educate, to inform, and to enlighten our customers so that we can reduce the probability of them being defrauded. What we have done with the digitization is to put our customers on the internet highway. So essentially, on that internet highway, there are many fraudsters. So essentially, we must educate them, we must capacitate them so that they protect themselves. And they are safe.
Absolutely. They have to be safe. Money is quite close to the heart.
And difficult to get.
I know. We have to protect it. My final question on your performance is, your loan book has been growing, still growing. And of course, I also noticed that you have also incomes coming in on your FX. I don't know whether this is a diversification. What are you seeing as well? And what are the merits on this?
Essentially, when COVID struck and subsequently we experienced the Russian-Ukraine war, we decided as a policy to keep the rights of our economy on. We knew it's the only economy that could give opportunities. And the only way to keep the economy on was to fund the economy. So for the last 5 years, we have sustained a 27% compounded growth rate on loans, just to ensure our customers are able to repurpose their businesses, they are able to change their businesses to an environment, and that young Kenyans remained employed. So that's why credit is growing at that very high rate above industry average by maybe 2 times.
Wow. You've made some heads turn, especially on your entry on the insurance industry. You got licensed. I don't know how that's panning out and what informed this. Is this a diversification measure, or there could have been a reason behind this?
Just before we go to insurance, let me also add on the question you had asked, non-funded income.
Absolutely.
Essentially, we realized that we needed to enhance
Oh,
the market for the Kenyans. So we became a champion of East African community. We became a champion for the East African, the African continental free trade area.
Yes.
And even including last week, we had over 100 mission of business people to DRC. Last year, but one, we had taken 300 for 2 weeks. And essentially what we are doing is to promote trade, enlarge market. But essentially, instead of giving loans, then we are giving trade finance tools. So we are earning now fees and commission other than interest rate, because this is a high interest regime. So we are moving customers from funded facilities to non-funded. And that is why we are seeing the growth in trade finance. Now, turning to insurance. We realized our biggest objective, and as determined by our purpose, is to change lives, give dignity and expand opportunities. We have done very well for the 18 million customers that are in Equity Bank. Then we realized we needed then to protect their health, we needed to protect their lives, and we needed to protect their property. So essentially, because we have given them enhanced quality of life, we said, how do we protect that life that we have enhanced? How do we ensure that they continue to enjoy dignity? And how do we protect the wealth they have created through the bank? And that is why it was important to bring insurance. That also explains why Equity Afia has been launched. So the diversification is to meet the needs of our customers. We realized 40% of default in loans occurs when there is a health incident within the family. To cure that problem, then we are providing affordable, high quality health. That health, to make it even more affordable, we are going through insurance. So that is insurance other than paying the bills. So that we share the burden of health all together. That's why we are diversified.
Wow. And I think that's more like a circular way of dealing with any challenge.
Circular focus on the client.
Absolutely. Towards the end of this conversation, I know you recently as well acquired and finalized acquiring the Spur Bank. I'm not sure how that turned out for you. Did it hit you hard, or how is it going so far?
As Spur Bank, we were reaching out to support teachers. Teachers have been the biggest block of customers for our Equity Group. And we realized that after 9 years of the investment, they were still going long, and essentially they started making very big losses that were eating into the savings of the teachers. So we said the best we could do is take all the teachers who had the balances, give it to them, and in return we'll be given loans. We were given loans worth 3 billion shillings, all of them non-performing. So we had a huge challenge, and if you look at our non-performing loans, surged up. It was surged up because of the 3 billion we deposited. But we felt it was easier for us to handle that than expose the teachers who had 1.5 billion shillings in their deposit that they could not get. So we provided relief to them as an expression of gratitude to them for the many years of support, and as an affirmation to the Kenyans that we shall always stand with them when need arise.
Wow. And thank you so much for that. At least there's some breadth to some of the people who are really concerned about that. Let's finally talk about your recent taking up of top-notch global experts. I saw you introducing them the other day, and I've seen some around as well today. What's informing this, and what are you looking at?
As you are aware, I've read Equity now for 32 years. And this is the 4th generation I'm bringing it to the bank, because every 10 years, Equity reinvents itself. Equity today is the largest company in terms of asset in East and Central Africa. The people who brought it here have done a commendable job. Now, Equity has globalized and has gone to challenging markets like DRC, and is likely to be bigger in DRC than Kenya by 2027. So we felt we needed highly experienced, highly exposed leaders who have done it before, to navigate to the next phase of the bank and
Yeah.
to guarantee that
Yeah.
customers' deposits remain safe,
Yeah.
investors' wealth remains safe. So it is more of strengthening the capability, the competence
Yeah.
to take the bank to the next level. Equity at 1.7 trillion shillings
Yeah.
is 11% of the GDP of Kenya. So it requires to, like the way the countries are managed, we needed really strong hands
Absolutely.
to hold the institution together.
Absolutely. And by the way, somebody told me when I told them I'm going to speak to you, they said, we need to know, are they going to the Ethiopian market? I don't know. I don't know. What's your comment on that?
We have a rep office in Ethiopia,
Oh.
so we have expressed our intention.
Yes.
It's a neighboring country. It's 100 million population. It's not fully banked.
Yeah.
Inclusion is at low level. So it's a very attractive market.
Okay.
And we're waiting for regulations
Yes.
to be formulated.
Okay.
Yeah.
I know I didn't prepare you for this, but you seem unmovable.
I'm not sorry.
And you're quite bullish. And maybe this could be a tip for anybody who's watching in leadership. I don't know. What is this that keeps you going? Because you're relentless.
I think what really keeps me going is the impact equity has.
Okay.
When you look at the 60,000 wings to fly kids,
Yeah.
it gives me energy
Yeah.
to see whether next year we can take another 11,000 like we did this year.
Yeah.
So I've really to work hard. When I look at the 4,000 peasant farmers who have become agribusinesses,
Yeah.
when I see them small micro enterprises which have become medium enterprises,
Yeah.
and the face of our capital as a country,
Yeah.
I feel very proud and energized to continue doing more of what we have done.
Wow. And for us here, we can only say keep going.
Thank you very much.
I have to give a final word for you to tell the shareholders who are watching. What is your final message for them, even on this particular day of your launch of sustainability? Please, to the camera.
To our customers, we continue to extend an invitation to you that we are there to help you, to support you, to transform your business, to change your life, to expand opportunities, and to support your household. To the investors, we continue to count on you to grow this bank. We deeply appreciate the $2 billion that you have given us in terms of capital, and we commit that we'll continue to do what we have done in the past, keep your capital safe, and to sweat it for a great returns.
Thank you so much for your time.
Thank you very much.
Absolutely. There you have it. That's James Mwangi himself, the CEO and MD Equity Group Holdings. Very bullish and saying, you know what, we're not stopping. And of course, congratulations to the entire Equity team for their launch on the 2022 Sustainability Report. Thank you so much for your time once again. We'll leave you right now with the market.